Taxes are pretty much the bane of everyone's existence, no matter what they do for a living, and they're even more complicated and more of a headache for entrepreneurs. With so many moving parts in the business and the way that you report the income that it generates, it can be quite a bit more complicated to file your taxes if you're a business owner than it is for someone who just has a W-2 and no other sources of income. Now, of course, my advice is always to make sure that you speak with a qualified tax professional well in advance of tax season to make sure that you have everything in order. In the meantime, however, here are some of the most common tax mistakes that entrepreneurs make and that you should avoid. First up is choosing the wrong business entity type. There are tax implications for whatever business entity type that you choose, so make sure you know what they are before you choose how to structure your business and that you comply with all of the requirements for whatever type of business you do choose. Again, I recommend that you speak with a qualified professional before making any decisions that will affect your tax obligations. But if you just need a quick overview of the different entity types and what their benefits and drawbacks are, you can check out my old video on the topic by sticking around to the end of this video or heading over to katecosta.com to grab the link. Another major mistake that all too many entrepreneurs make is just being sloppy with their record keeping. Now, I've talked about this before, and it's pretty self-explanatory, so I'm not going to go into much detail here. But of course, if you make a mess of your books, you're more than likely going to make a mess of your taxes as well. In line with not keeping your records in order is not staying organized about your deductions. Many entrepreneurs either over or underutilize the deductions available to them by doing things like not claiming the home office deduction even if they have a home-based business, or deducting the full price of meals or entertainment when really only 50% is allowed as a deduction. Misclassifying workers is another big issue that the IRS is cracking down on, so much so that I've talked about it in a couple of different videos. There are strict rules about who can be classed as a contractor and who must be considered an employee. Again, stick around until the end of the video or head over to katecosta.com to get a link to another video of mine to learn the basic differences. But again, also make sure you get professional advice and that you're following all of the rules. Finally, remember to pay attention to details and not over or understate your income. Now, you would think that would be obvious, but it's far too common for business owners to accidentally include sales tax that they collected as part of their income, for example, or maybe not match the 1099s that they receive from clients they've provided services to the income that they claim on their own returns. And of course, the silliest mistake that is all too common among business owners is missing the filing deadline. Now, come on, you know all year that taxes are due, so don't uselessly accrue failure to file penalties. Just make sure that you're on time every time. You don't want to get stuck in an expensive and time-consuming dispute with the IRS, so be sure to get the professional advice that you need and follow these tips to make sure that you don't mess up your business's tax filings. Did you like this video or find it helpful? If so, please let me know by liking it on YouTube and Facebook and sharing it on social media. Also, don't forget to sign up for email updates from me to be sure that you don't miss out on any tips, tricks, or tutorials to help you plan, launch, and grow your business.